Hi there, and thanks for listening to the Adulting is Easy podcast, where we make adulting easier by making money easier. This is your host, Lauren, and I'm joined today by Darth Dividend, a travel nurse. Gary has a degree in exercise physiology. He also completed an accelerated nursing program to become an RN in 2019. Now he's becoming a nurse practitioner. Gary's passionate about investing, in particular, dividend paying stocks. He shares his passion on Twitter/X and YouTube, where he has about 15,000 followers or subscribers on each platform. Thanks for joining me, Gary.
Hey, thanks for having me on.
Absolutely. Our goal for today, as it always is to make adulting easier for listeners by discussing a personal finance topic, since managing money is a big part of adulting. So today, Darth, Gary, let's talk kind of general a little bit about personal finance, stocks, dividends, things like that. But first, I wanted to ask, why did you make that change to nursing?
So, see, my undergrad was in exercise physiology at Kent State. I graduated in 2008. Worked in the field a little bit. I just didn't really feel fulfilled. And the other thing was a financial issue. So, you're making 12, 18 an hour doing cardiac rehab. It was time to enter, and I actually entered an accelerated nursing program in 2012 at Cuyahoga Community College, and then graduated in 2013. So I started working as a nurse in March 2014, and I worked in the field a little bit. Soon to be, hopefully, soon to be a nurse practitioner. I went back from my RN to BSN in 2017 to 2019 at Ohio University. Took a year off to save up and actually invest, which was nice, and to pay for some of my college, which I am debt free. I can thank that right now. Um, to enter NP school. I graduated in August of 2023 in nurse practitioner school. So I kind of wanted to take a year off, enjoy traveling, refresh and recharge because, working through the pandemic and graduate school, I needed to recharge my batteries. And there was mentally, wasn't there to study. But now I'm starting to study and prepare for boards. So it was good to take a year off, enjoy the travel nursing, and actually be debt free. I am student loan debt free. In I think April 2024, I made that announcement on X. So that's a great feeling as well.
Congrats. Yeah, I remember seeing your posts from the COVID times on then Twitter, now X. And it was always just like how long your shifts were and how draining they seemed. And I'm glad you got to recharge a little bit over the last year.
Yeah, it's a great feeling to be done. It's weird to actually have a life. I'm not used to that. So it's like, what am I doing today? So now it's like really mentally trying to buckle down and start studying for boards. It's a change. So now it's like, okay, I got to get that mental focus back and go from there.
Can you explain what travel nursing is real quick?
So travel nursing is you basically sign a contract and you go from one location to another, where you live and stuff. So I enjoy it. I try to make it as simplified as possible. Travel nursing, basically you sign a contract with a hospital system that you'll work for them for X amount of time through your company. And I have a very good recruiter, Jen Ernie. I'll give you a shout out on here. So she's with my company GHR Staffing. So she recruited me, and she's a fantastic recruiter, hooking me up with opportunities.
So, how long are these contracts?
It just depends. I mean, it can be 6, could be 12. Things can change. I mean, they get staffed and and you're gone. I mean, it can happen. My contract could be gone at any moment. So, you have to be aware of that once you sign a contract and stuff.
Do you get
Knock on
paid
wood, but
more?
I mean, technically, yes. It would much rather, hospitals would much rather have hired staff and trained staff. I mean, just being straightforward and honest. But since there's a shortage, they hire us as travel nurses or contractors to help out. And it's been a great experience and very enjoyable experience. Trying that. I always wanted to do it. I finally just said, I'm going to do it. And I did that in the middle of nurse practitioner school, and I actually networked pretty hard at some places, and I have some opportunities possibly. So it wasn't done, it was a perfect scenario to do for me.
So getting back to investing, congrats on being debt free. Like that's huge, especially once you
Thanks.
get into the postgraduate schooling and all of that. That's really incredible. But what made you get interested in investing in the first place?
It's really funny. I just was like, okay, it was 2018, and I really had no knowledge worth of investing, just a 403b with my employer, and I'm like, is a 401k enough for retirement? And I just woke up in the middle of the night, like at 2 in the morning, and I'm like, okay, there's an IRA you can do, and there's dividend investing. So I started watching, a few videos with PPEN, and I'm like, oh wow, I could do this. So then I started dividend investing. So that's kind of how it happened. Like 2018, early 2019, probably mid 2019 is when I started investing really into dividend stocks.
I'm glad that you brought up the 403b, 401k, and just so you guys know, those are basically the same thing. Just one's sort of for like nonprofits and one's not. But the idea is the same. But the 401ks or 403bs, typically it's pre-tax income. Your employer takes that money from your paycheck and then puts it into an account, and then you pick where it's invested from a list of choices. And a lot of times your employer will match part of what you put in. And I think kind of a typical match is say 3 or 4%. So you put 3 or 4% of your paycheck in, you're not taxed on it right now. They match however much that is. And then after a few years, that's your money. You can take it with you when you go. You can transfer your 401k, et cetera. And then it's a good retirement account for you after you're 59 and a half. I said all that because I think a lot of people get this idea that as long as they're doing their match, that's like, yes, it's a benefit, but I think a lot of people think that's also a suggested amount. If you if you put in your 4% and your employer puts in your 4%, you're good and you can spend the rest of it. And I think that's what a lot of people think, and that's not right. You need more than that.
Yeah, I usually do 6 or 7% and then, get a match and stuff. But a lot of people don't realize the rollover too. And they roll over, or they take money out and they get taxed and penalty. So they need to be aware of that. They need to be obviously very smart with their money, but it's best to speak with a financial advisor or their advisors if they decide to do that, because people just pull it out. And then one person asked me at work one time, well, yeah, I put my 401k out. Like, what should I do with it? I look at them and go, why did you do that? And they're like, I go, you're going to get penalized on that. They go, oh,
Yeah,
it's best to seek financial advice from somebody financially, certified and stuff.
sure. There's post-tax 401ks as well, but most of them are going to be the traditional 401ks, the ones that like how everything started. They are pre-tax, and then also you have a 10% penalty. So if you take this stuff out before 59 and a half, you're getting hit with all those taxes you didn't pay at first and a 10% penalty on top of that. So let's say you have 100 grand in your 401k, you cash it out. You could easily be walking off with what, 65,000? I mean, it really is a big hit, and you definitely shouldn't do that, guys.
And people don't realize, if you have a Roth IRA, you can roll that into a Roth, or a traditional IRA, you can do that into a traditional. But, you just have to be very careful with that and check with your advisor to make sure you don't get taxed. I mean, I have a really good advisor for mine that's a tax advisor. And, sometimes she even tells me, why'd you sell that? You're going to owe some taxes at the end of the year. I'm like, oops, so it's, when you have a go-to person like that, that's very important.
Yeah, and the like if you have it in Vanguard, for example, whoever the custodian is can usually help you with some of that too. So a retirement account is sort of what we've talked about so far. That's an account, exactly like it sounds. That's not the investment itself. And so a lot of what's in these, a lot of what people invested in their retirement accounts are stocks. So before we get into dividend stocks, can you just talk a little bit about stocks in general?
So a stock is kind of like, it represents a share of ownership in a company. So, and a share is like, it's like a unit that you own. So if I own a stock such as Starbucks, yes, I do own Starbucks stock. That's a share of ownership within the company. So I own shares. I own like 7 or 8 shares of Starbucks, hopefully more, but that accumulates over time. We'll get to the next topic, which you're going to be asking me about. Oh, which is a
Oh, sorry.
dividend. Oh, and that's basically where a distribution of earnings is to the shareholders. Obviously, that's a call of the board of directors, and they have to make money, and the money has to be there, and the board of directors have to make the call. And that's basically what I've been doing is being a dividend investor. So I invest in stocks for dividends for that passive income, and I'm treating it as my own retirement pension.
So every company that makes a profit pays it out to the people that own it. They're stockholders.
Not every company. So it just depends on the board of directors. So again, if a company's not doing well, board of directors will say, "Hey, we're not going to do that," because there's certain stocks out there that are not doing that, and there's certain stocks that are just starting to do that. So it just depends on what you invest in. It depends on the call of the board of directors. It depends on their values and what they see for investors, because certain companies, like business development companies, 90 plus, you can correct me if I'm wrong, but 90% of what they make have to go back to investors. The same with the real estate investment trust, which
At
is,
REITs.
I mean, you do private, real estate. I do public real estate, which is stocks that are REITs or real estate investment trusts. So 90% of what they make have to go back to investors. They have to follow the rules, or they get a big, message from the government.
Yeah, a lot of times when companies are just starting out, startups, and they're growing, they want to keep all of the money that they're making for themselves to continue to grow the business. It's normally, correct me if I'm wrong, it's normally companies that have hit somewhat of maturity that are ready to be paying out. And then I guess on the other end, it's like if they're going through a tough time, then they're going to need to keep the money that they're making as well to invest in the business.
Right. Or they'll cut the dividend. So, if they're not getting the money there, or their payout ratio is really high, sometimes they'll cut their dividends. So you have to be aware of that. Some companies like Meta just started a dividend. So they
That's
just
wild.
started, yeah, or Meta or Facebook. So some of these companies are starting to do that, but it's not guaranteed that they're going to do that.
Yep. So when I'm looking for a company to invest in that pays dividends because I want to collect this cash flow, I assume. Is that why?
Well, for me, myself, I mean, everybody has a different strategy. I am kind of an income investor, so the higher yielding stocks I invest in. You have to be careful with that. We'll go into that later. But I also buy dividend growth stocks, so companies that have a tradition of raising their dividend over time. So it's like you're getting your own raise. So like 10 cents in 1 year, 12 cents the next month, 30, 40 cents in the next year or two. So it just depends on what you invest in.
So, well, why don't we go into that? Why would a high dividend yield not be a good thing? Why would I not want to buy a company that's got the 6% dividend yield or something? Why would that not be good?
Well, you can even go higher. I mean, 10 or 11.
Oof.
I do invest in some that are higher yielders, business development companies, but you have to be very careful. You have to make sure that the board of directors are sharp and accurate. You have to make sure that the revenue's there. You have to make sure earnings per share is strong. You have to make sure that they're stable and they're not in too much debt. So companies that have a higher yield, like Arbor Realty Trust, they're a really high yielder, but so far, fingers crossed, they're financially stable. So, and again, they're a real estate investment trust. They're actually a mortgage-backed real estate investment trust versus, a company that's like, just might as well just say this. I just bought Aflac today. That'll be my next YouTube video, but their payout ratio is low. Their revenues trends are strong, earnings per share, and they have a tradition of hiking their dividend. So I always, long-term wise, I always dividend growth always wins. So I always tell people that, and consistency always wins. You don't want to buy a stock that will distribute a dividend of quarterly 12 cents one quarter and then 8 cents another quarter. That's not consistent. So consistency always matters too when it comes to dividend investing.
What are you watching? What do you have your eye on other than Affleck?
I've been buying Lowe's. I've been buying Home Depot. Starbucks has been down. I've been buying some shares of them. Nike's been down. It's kind of funny with like Starbucks and McDonald's too. They kind of open their mouth with the Palestine-Israeli, conflict, and that caused them rifts, and it actually affected the share price. So I kind of
Mm.
capitalized on them with a drop in share price. Same with Nike. Since they're down, I mean, they're going to generate revenue, and it's just time to capitalize on dips. Myself
What
being single, no kids, and I can go ahead.
what is going on with Nike? Like I sort of like isn't athleisure working from home like it just seems like I don't know of any foot and mouth stuff that they've done. What is going on with them?
It's just again, the market right now is just a little crazy right now. It's all tech stocks, Nvidia's up, Apple's up, but everything
Yeah.
else is struggling. So, it's just time to capitalize. I'm not going to, I haven't really looked too much into it, but the trends have been down. Maybe they've been overvalued. Of course, we're not giving financial advice or tax advice. It's for entertainment purposes only for this. But, when there's prices that are in dips, I mean, I capitalize on them. REITs, the real estate sector, the financial sector has been down, and some of these really good companies are down. So it's just time to capitalize on them.
I would like to let you know that I'm doing my part for Lowe's and Home Depot. I am doing more than my share of buying from those places. So I'm helping out your stocks, I think.
Well, the thing is, those companies are always busy. You see people in the store, Lowe's and Home
Yeah.
Depot, they're always busy. Starbucks, it's always busy. I mean, people can make their own coffee. I mean, I have an espresso machine that I just repaired and stuff, and that's cheaper than Starbucks coffee. But, people, they're busy. McDonald's is busy. It doesn't matter how bad the food is, or health wise, people are still going to go to McDonald's. So I invest in companies that are always busy. So if they're not busy, my interest isn't really there. But, Hershey's, people buy Hershey's, the Dots pretzels. I mean, those are probably the most addicting things out there. I don't know if you've ever tried Dots pretzels, but that honey mustard flavor, you bite one, it's going to be 10. That's guaranteed. 10 pretzels. Stay
So you
away from that.
do you believe in buying stocks in companies and products that you own and like?
Oh yeah, absolutely. One I can give you a huge example is Procter and Gamble. I mean, I have their toothpaste. I just use their NyQuil just to go to bed. Their toothpaste, their toothbrush. I mean, you see the PG logo, Tide. I mean, I got that everywhere. Pepsi's another one that I invest in. I mean, every morning I have Quaker Oats, usually, especially on my day to work. You just throw it in the microwave and go. Coca-Cola, I like Diet Coke. It's always nice when the hospital sometimes has Diet Coke. So that'll be my like 3 p.m. Caffeine rush. But a lot of companies that are in demand, people use. I mean, you can't go wrong with it. I mean, it's not guaranteed, but when they're consistent, you get good results, you get good dividend growth.
Have you ever been wrong about a stock?
Oh yeah. I mean, I'll just be straightforward. One of them, let's see, people want to say, well, what would be a good example that I've been wrong about? Um, you know, Nobody's perfect.
I
What
would
was
think you
one?
were less credible if you were sitting here telling me you never made a mistake, frankly.
No, I would try to think of the most recent. I would probably say Prospect Capital. So I bought it for the yield, and it's just the price per share went down, um, and its dividend just never increased, it actually decreased. And same with AGNC. I would probably say those two are the most prevalent that I made mistakes in. Now, people will say with Zim integrated services, people are like, why are you buying them? Well, I just find it is a very interesting company and stuff, the way they share so much revenue and stuff. I'll probably rebuy them, to be honest. That's a really high yielding. It's that one, it's not the most consistent, but it's like throwing darts in a dartboard. Sometimes you hit the center, sometimes you don't with their earnings. That one's really risky. But I would probably say, because I understood Zim, I mean, it can blow up in your face and stuff. But I would probably say AG&C and Prospect Capital were my two. Um, I pulled out of Walgreens at the right time. I kind of saw the red flags pop, and I bought a dip on that just to see what happened. I think I lost maybe 200 tax loss harvested with that. I actually threw it into Kroger, which was a better investment. That's another busy grocery store, which I invest in. So, Walgreens has a pharmacy, Kroger has a pharmacy. It's the next best thing. So, I would probably say those two out of all of them.
And it's
Um,
because you were chasing too high of a dividend yield and you weren't like
yeah,
focused on like the fundamentals or the consistency and you kind of chase yield and that's what the problem was.
I really didn't, see the red flags. Now, again, I invest in high yielders, Arbor Realty Trust, CSWC, Saratoga Investment Corp, ARCC Business Development Companies, but a little bit aware of, you know, the the earnings and the red flags compared to before.
So let's say some listeners are interested in stocks, interested specifically in dividends. Do they have to buy individual stocks or can they buy index funds?
Well, there's index funds and mutual funds. So, some of these ETFs, it's like a stock within a stock. So it's like you're creating your own. Um, how would I describe an ETF? I mean, what would be the best way to describe it? Probably a bunch of stocks into a share, and you have to pay a little bit of an expense ratio. And you can invest in that, or you can invest in mutual funds. So it's not just stocks when it comes to investing or passive income investing.
Yeah, again, it's like what we were talking about with
Mm.
the retirement accounts earlier. You can buy stocks within retirement accounts. You can buy index funds, mutual funds, ETFs. You can buy those within your retirement accounts. You can also buy them outside of your retirement accounts, which I'm assuming is what you are doing, right, Gary? Do you have a brokerage account and that's where your holdings are?
Yeah, I have a brokerage account, actually two of them, E-Trade and M1 Finance. So M1 Finance, I like the fractional shares investing where I invest into one company and basically it distributes dividends. So then I can buy the dividend growth stocks from the income from my high income stocks to buy my dividend growth stocks. So I really like that strategy. So sometimes I'll make, 400 plus dollars a month, and that gets distributed straight into my dividend growth stocks.
Is there a
E-Trade,
tax implication for that?
yes. I mean, that's more appropriate to discuss with a tax advisor. There's ordinary dividends and qualified. Just depends on your income. That's best to speak with a CPA about that
Yeah, I was just curious.
because everybody's different, income wise.
So you're a nurse, travel nurse, becoming a nurse practitioner. You're a dividend investor. Is there any overlap between those two things? Does one help you with the other?
Um, Actually, it's probably I can't really compare them. I mean, if I see a patient in labs and pathophysiology and this and that, I can't really correlate that, to be honest. It would be hard to really correlate anything, if somebody has a disease or catching things, analytics. Um, Analytics with dividend investing in stocks is completely different from, healthcare. So I can't really relate that, to be honest with you.
Is there any mindset that works for both? Like you're always trying to like see patterns, anticipate problems, or anything like that?
Well, I mean, with dividend investing, it's nice because you just put money in there. Good stocks, they're reliable. Things don't really change usually. Okay. Well, obviously, being a nurse, things can change in your patients in a heartbeat. So you have to be on your feet at all the time. Being a nurse on the floor is kind of like day trading, you know, and it's just rapid fire all the time. Except day trading, you're usually wrong. Being an experienced nurse, you usually catch things. Um, but it's a little bit more laid back as a dividend investor. I just put money in. We do a thing called dollar cost averaging. Put money in weekly, I'm throwing in 350 a week into my dividend portfolio, hopefully 500 again to really create a, they call it a snowball effect or compound interest. So it's just a little bit more laid back.
Is there anything else you want to add before we wrap up?
Yeah. So the one thing with nursing is, you know, is that nobody's safe in any career. And I'm going to say during the pandemic, it was a little eye opening because when the pandemic started, obviously it's a stressful time, but all the hospitals, I mean, I can tell you in my area, stopped the 403B contribution. Well, we could contribute, but they didn't match. So think about that. There's a rough time. You're working as a nurse and you're dealing with a situation that's really bad. You're trying to help each other out, and your matching is gone.
Yeah.
So that, I was kind of happy I started dividend investing before that, because it just made me realize that, things can happen. You could be let go. Nothing's set in stone. It doesn't matter what field you're in demand, you can be gone. And you should have multiple sources of income for retirement. Obviously, you can, okay, taking out money out of a 401k, sure, that's income, but passive income is great. I'm getting myself raises. I didn't get a raise during the pandemic time. So guess what did? My dividend stocks, they got hikes or raises. So it was really nice to really understand that in an art form and be prepared in case of something happens like this again.
Yeah, I'm sorry that happened, but I'm glad you were able to learn something from it. And thank you for sharing that. Can you let people know how to get in touch with you and follow you?
Well, I have a YouTube channel. It's Darth Dividend, youtube.com/ Darth Dividend, and you can find me on X at Darth Dividend 23. So, it's wow, time has been flying right now with us. I'm looking forward to being on here again with you, of course. And thank you for having me on. It's always been a blessing being on X Spaces with you. We got to do this again. We have not done that in a long time. All of us together. We got to get the crew back.
I am down for that. And guys, be notified. Follow me on Twitter, X at Adulting is Easy, Instagram, Adulting is Easy Real. If you like this episode, you'll also like episode 115, Dividends with Dividend Dream, or 143, Dividends with Dividend Dave from the Passive Income Podcast. Thanks again for listening, everybody. Hopefully, Gary and I have made adulting a little easier for you.